This is the Best Stocks to Buy podcast. We use our proprietary algorithms to screen, analyze, and rank over 6,000 stocks every week. This podcast is made possible by Conner Management Group, a registered investment advisor firm. If you've been enjoying these podcasts, we're sure you'll like our Saturday morning newsletter just as much, if not more. It is informative but light and includes personally curated articles on investing, money, and just plain leisure fun that we think you would enjoy. Just visit our website at www.connermg.com and click on newsletter to subscribe. All right, on to our presentation. Hi, everyone. This is Mathis Conner with Conner Management Group, and this week we're going to look at the best healthcare stock to buy right now. Today is Monday, May 18th, 2015, and here on the opening slide, we see that this company is in the medical appliances and equipment industry. We see its 6-month upside potential at 21.9%. And on to the next slide, and we see that the name of this company is called the Stryker Corporation. The ticker symbol is SYK. Once again, this company is in the medical appliances industry, and we have covered the stock before, and we continue to see, we now see its 6-month upside potential at 21.9%. On to the quick facts slide. The business summary for Stryker is as follows. Stryker Corporation develops, manufactures, and markets orthopedic implants, med-surg equipment, and neurotechnology and spine products. Their orthopedic products include hip, knee, trauma, spinal, and other implants. So they do a lot of implants. The med-surg includes powered instruments, endoscopic systems, other operating devices, specialty stretchers, and maternity beds. Their orthopedic implants were responsible for 43% of their 2014 sales, and their medical surgical equipment were responsible for 39% of 2014 sales, and their neurotechnology and spine products were responsible for 18% of sales. So a simple way of thinking of Stryker is that these guys do a lot of implants related to hips, knees, and other type of technology appliance related devices. So that's what we have for its business summary. Their website is www.strykercorp.com. That's STRYKER Corp.com. The company is headquartered in Kalamazoo, Michigan. They were founded in 1941. They have 25,000 employees, and their ticker symbol is SYK. And onto the products and services slide. We don't have too much here. We've got the Stryker logo and some excerpts from a recent investor presentation. We have a photo of an advanced robotic arm that assists with surgery. We have another picture here of what appears to be stents for going into blood vessels to help restore them. And I think that's all that's worth noting here. All right, on to the metrics slide. Over the last 12 months, the revenue for Stryker was $9.8 billion. The net income over the last 12 months was $669 million, and the cash from operations over the last 12 months was $2.0 billion. So Stryker is bringing in quite a bit of cash. They are a sizable company. The operating margins for 2014 were 20.9%, and for 2015, they're expected to be 22.5%, and that's a good trend to see. Onto the valuation metrics. The trailing PE ratio right now for Stryker is 29.6, and the forward PE ratio for Stryker is 19.1, and that implies analysts expect earnings to increase quite a bit over the next year. The PEG ratio is at 2.2. That's a bit rich. The price to sales ratio is at 3.7, and the price to book ratio is at 4.3, and the enterprise value to EBITDA ratio is at 13.4. The dividend yield for Stryker stands at 1.5%, and the average dividend payout ratio over the last 3 years has been 38%. Going on to the price chart, what we see is that over the last year, Stryker's stock price has gone up 20.7%. Basically, the company stock has not moved that much since December and January of this year, and we think that just adds to pressure for the stock to advance, considering its strong cash flow. Also of note is that the medical equipment and biotechnology industry has been a little bit in the doldrums as of late, so that is possibly why Stryker just hasn't advanced too much, or has only advanced, say, 20.7% over the past year. The company seems quite strong otherwise. On to the next slide. We call it the why now, the bull rationale. And this explains why we're currently bullish on Stryker. Basically, what we see here is that the sales per share are expected to continue to increase over the next 2 years. The expenses on a per share basis are expected to decline, as are the operating, which is evidenced by the projected increases in operating margin. The valuation metrics are expected to lower in the near future, which will create pressure for the stock price to increase. And additionally, the company is continuing to retire its debt. The company is expected to retire almost $1 billion in debt over this year. And let's see, their financial strength, which we'll get to, is very good. But the total debt they have outstanding right now is only, say, $2 billion. And their net profit for 2014 was about $1 billion. So as you can tell, they can retire their debt pretty quickly at this rate. Onto the summary slide, the financial statement, as we were just alluding to, we consider it excellent. The company has very little debt for its cash flow, and as a result, a lot of financial analysts expect the company to make some acquisitions in the near future. As we mentioned, the operating margin trend is increasing. The price pattern trend is also increasing. The stock's been up a little over 20%. And overall market outlook is flat right now. We are seeing a number of overvalued names compared to undervalued names. We just don't see a lot of pressure on the market to go one way or the other, although if we were pressed, we think the market could experience a modest pullback. So the recent closing price for Stryker was $96.70, and our 6-month price target for the company is $117.14. So that gives this company a 6-month upside potential of 21.9%. So Stryker's products continue to be in demand. They have very strong cash flow. They're lowering their debt quite quickly, and they have very strong financial statements. So it's for all these reasons that we believe that Stryker Corporation is the best healthcare stock to buy right now. We hope you found this presentation helpful, and we'll talk to you again soon. Take care. Just to close, remember that Connor Management Group is a registered investment advisor. In addition to being a source of quality stock investment reviews, We are money managers, not financial planners. Our sole goal is to grow our clients' savings and retirement accounts in a personalized manner as quickly as possible using one or more of our strategies. We can manage all or just part of your IRA account as well as a regular taxable account. Just visit us at www.connormg.com to review our service or just give us a call at 281-947-2201. Have a great week.